Digant Haria, the co-founder at Green Edge Wealth, as well on the show. Digant, hi. Greetings for the new year. Hope 2025 is bigger, better, brighter for you as well. But just, is it going to be bigger, better for the financial sector? Because last 2 to 3 years, the Bank Nifty has been underperforming the benchmark index. A lot of these stocks are just sideways. This morning, there's the positive news, at least in Kotak Mahindra Bank, wherein you have Citi upgrading it. But is it going to be a year of financials comeback?
Hi, morning, and wish you a great 2025 to all of you. Yeah, so you're right. Last two years have been tough for the financial sector. The sector, it seems that the valuations are cheap, but then we have growth slowdown also. I don't think that the first half of 2025 is going to be any magic for this entire banking sector or the NBFC space. But yeah, I think somewhere we are very close to the bottom, if not the bottom, because and when we say bottom, it's in terms of business that the RBI started tightening somewhere 12 months back. I think we are coming close to we are at the end of that regulatory tightening cycle. Then second, interest rates have been very high for a long time. I think we are we are maybe 3 6 months away from where at least the liquidity part of the interest rates should start easing out, unless Trump does something really drastic in US. And then the asset quality cycle, that also in microfinance, personal loans, that we are already seeing that the deterioration has happened. And see, these are all retail products, so the write-offs and the comeback, they happen quite fast. So I think somewhere between March and June, I think the sector should really bottom out. And then yes, the second half of 2025 could be the year for financials because the rest of the markets does not look very good at all. So yeah, I think I'm very hopeful for financials, but I think it's just 3 6 months away, the glory period.
Okay. Digant, hi, morning. What do you have to say about IT then? I mean, the way the stocks are getting clobbered for the last 2 3 days, it seems like the street is quite jittery about what the earnings may actually throw up.
Yeah, morning. See, these IT stocks had rallied because of the dollar strength and because of Trump getting reelected and the we have the past precedent where the corporate start spending more and good things happen. And Indian IT services companies are derivative plays of that. I think they ran up a little fast, a little more in expectation and yeah, earnings. There is still that the AI, the AI threat and the U.S. economy. Though we are excited that Trump is back, but it's a very very divergent economy. Some things are doing really well, some things are going into recession. So I think I am not too bullish on IT as a sector, and some correction here and there. One can never rule that out because they are trading very expensive to the growth potential which they have.
That's the take on IT.
Bullish on private banks, but nobody's bullish on NBFCs. And NBFC stocks are doing nothing. How long will this continue?
So I think it's probably somewhere in March or June. So Nikunj, NBFC also we need to dissect it. Like housing finance companies, I think they are well valued for the growth which they can deliver. There is nothing great happening either in affordable housing or in normal housing. We are struggling for that 10 to 12% kind of growth at the industry level. So housing finance hasn't done bad, will not do great. CV finance, I think we saw the best 3 years. Now the cycle there is also turning adverse. So CV finance may not do well. Gold finance has been the star, Nikunj. I think gold finance, Muthoot particularly has been doing very well. I think there's a lot of legs out there that can do well for some more time. Then the next big sector is this whole consumer slash microfinance, personal loan slash microfinance. I think that should bottom out in another 3 6 months. And once it bottoms out, this sector will hands down beat the returns which private sector banks can give. I think private sector banks is more of a safety trade right now. If you ask me, HDFC, ICICI, these banks are not cheap for the kind of growth which we are seeing in the system. So, it's only when the system growth improves, you will see some macro re-rating happening in these private sector banks as well. I think private banks are more a hiding place than anything else. But yeah, if somebody is able to time and, looking for higher returns, I think NBFC is going to be the space. But yeah, March to June is where, we would be very focused on selecting the stocks in that space.
Digant, where do you see things will start peaking out this year? For example, let's say real estate. You just mentioned that affordable housing is not doing well, but luxury is doing well. The second is tourism. There are a lot of cycles, Digant, which have done very well in last 2-3 years. Hospitality, to some extent, luxury housing, luxury consumption. Where do you think the base effect or the peak factor could kick in 2025?
I think we are already seeing that, Nikunj. If you look at luxury real estate or even hotels, the room rates, I think we are making a high base, Nikunj. We have seen 2 fantastic years, and that high base is really kicking in a lot of these sectors. So if I have to tell you, there were three heroes of the last 2-year bull market. One was government spending. Second was this rich man's consumption. All the themes that you mentioned, Nikunj. And third one, obviously, is that global de-dollarization theme, which was, pushing the mining and the metal sector higher. I think all the three themes have taken a pause. Government spending was very slow. Probably that can revive very well. Rich man's consumption, we are already at a high base, be it travel, tourism, hospitals, or, even this luxury real estate. We are at a high base for sure. And when it comes to the third part, which is the global de-dollarization theme, because of Trump, that has also paused. I think we should let the rich man's theme rest for a little more while in 2025. Maybe 26 is the year when they start doing well again. But I think government spending can really pick up, and this whole commodity/metal trade can also pick up. So if I have to choose, where can we see, a bullish trend? I think everything which benefits from government spending and this whole de-dollarization trade, that will probably start, moving up with time. Rich man's consumption has to wait. At least that is what I feel, Nikhil.
Always looked at years and years of consolidation, then you pick up trend. In 3 years, the stock has been flat. And 3 years, Digant, for a franchise like Bajaj Finance, if it has consolidated, is it getting ready for a decent year?
Yeah, I think so. See, again, Bajaj Finance has been the bellwether of personal loans and consumption loans, if we have to say that. And that's a space which has struggled. One from the regulators tightening, and second from this over leveraging of the borrowers and general slowdown there. I think we are coming close to the end of that cycle, and probably maybe 2025 and Bajaj Finance should be at much better levels. See, the price to book has corrected from 9 times to 4.5 times. I think even if Bajaj does 22% plus kind of growth, we can easily see levels of 8-9,000 coming. But yeah, I think these regulatory cycles, interest rate cycle, and the asset quality cycle, we are probably just 3-4 months more of pain, and after that it should do well. There's no reason why Bajaj Finance should not do well towards the second half of 2025. So with Bajaj Finance, something like an L&D Finance, things in microfinance space, I think they'll all do well after the June or somewhere around that point of time. So I'll be very watching them on a very optimistic note from here.
So the second half of the year might see a pickup. Even the MFI pain might likely die down by then. But will we see a pickup in Reliance Industries? I mean, last year was the first year in 10 years that Reliance actually reported a negative stock performance. Do you think that means it's ripe for a big outperformance in 2025, or do you expect the moderation to continue for Reliance, Digant?
Very difficult to answer this question. This is a stock which has perplexed everyone. Like something does well, something does not do well. So the retail piece is probably slowing down. But there's this Geo IPO which is coming. And, in the oil and gas, we saw record refining margins last year. And, those margins have now cooled off. So very difficult to call out this name. And see, the other problem is that when there is so much FII selling which is happening, see, the FIIs have to sell what they own. So Reliance is one, and obviously, all the large banks also have borne the brunt of this FII selling. So I think a lot depends on if FIIs come back. And that does not look very easy because the money has not gone to China or somewhere else. The money has gone back to the US. they'll at least wait for 6 months to see how Trump unfolds before they make big commitments to India. So I don't know. I'm not very, I don't see very clear upsides or, clear patterns in this stock.
Vishali, has Reliance corrected enough? It's not a, slight under.
If you like this video, then like, share and subscribe to ET Now.